So let's talk about trends real quick, because the individual candle is just represents one session. We know that there are multiple sessions in the market each and every day, no matter what time frame you're on. When we have these combined sessions and we have these combined moves, you'll notice kind of an up and down flow or tendency. We call these trends, right? And there are two main parts of a trend. Let's take a bullish example for this first one. We're going to have moves that go up. These are going to be called extensions. We're going to have moves that go down. These are going to be called retracements, right? And we're going to take a bullish again. Bullish trend, right? So here's the thing. In a bullish trend, which move must be longer? The extension or the retracement? Yep, the extension, right? So we add these together. We have an extension that goes like that. We have a retracement that pulls back. We then have another extension that goes forward. We then have another retracement that goes back. And as long as we are in a bullish trend, we keep this pattern going of longer extensions, smaller retracements. Longer extensions, smaller retracements, right? Now in real life, it doesn't look this smooth, and that's we're just touching on the basics. I want to show you the smooth examples first, and then we'll dive into the charts tomorrow and look at some sloppy ones. But if you can't understand it when it's right in front of your face, it's going to be very, very hard to understand in the real markets, right? So this would be an example of a bullish trend. Again, we have another way to look at this instead of just extensions and retracements is a series of higher highs and higher lows, right? So here is a high. Here is a higher high. Here is a low. Here is a higher low. If our lows are consistently getting higher and our highs are consistently getting higher, we are going to be in a bullish trend, right? For a bearish trend, it would be the exact opposite. We're still going to have extensions and we're still going to have retracements. The only difference is that they're going to be in the opposite direction. So our extensions are still going to be longer. Our retracements are still going to be shorter. They're just going to be in the opposite direction, right? So in a bearish trend, our extensions are going to be going down. And let me just copy and paste this bearish, for example, just in case everyone's a little bit late seeing this. In a bearish trend, our extensions are going to be going down. Our retracements are going to be going up. And again, we're going to continue this series of longer extensions, smaller retracements, longer extensions. Now, we're still going to have the same pattern as the bullish trend, but just in the opposite direction. So in this case, right, our lows are getting lower consistently, and our highs are getting lower. Does that make sense, guys? Perfect. Now, if we want to put another label of rules on them, we can do that as well. So we'll take the bullish trend for start, right? Our initial starting point of the bullish trend, this is going to be redundant, but is going to be called our starting point. And I'll label this SP for starting point. Our first high up here is going to be called our initial, there you go, let's take this, is going to be called our initial structure high. Initial structure high, because this is the first high in our trend. Our retracement, you can call it retracement, you can call it pullback, there's many different names for it, right? I'm going to call it an outside return, because that's what we tend to call it on the platform. But again, it doesn't. If you hear retracement, if you hear pullback, it's all the same, right? Just different terminology across the board. It's going to be our outside return, and then this next extension, this is going to be called our new structure high. So just as I gave you a rule earlier for identifying candlesticks and breaking them up into third, I'm going to give you a rule for identifying a confirmed trend. A confirmed trend comes when we have this 3-point move, where we have a move up, a confirmed bullish trend, where we have a move up, we have a move down, and then we have a secondary move up. So when we have a starting point to new structure high, or initial structure high as our first step, initial structure high to our outside return as our second step, and then a new structure high as being our third step. When we have that and we call it a 3-point move, that's when we can say that we are in a confirmed trend. And in this case, a confirmed bullish trend. What timeline is the best for identifying a trend? Any timeline. And we'll get into higher time frame analysis a little bit later, but any time frame. Trends will exist on any chart. Not to get too confusing of you, some of you guys probably saw the reel I did the other day on this. The hard part is that there are always trends within trends within trends. So the market works in fractals, kind of like snowflakes. If you look at a snowflake under a microscope, there is always a pattern you can see. Then there's a smaller pattern, a smaller pattern, a smaller pattern. The market is the same way. You may have a bullish trend on the weekly, but within that bullish trend on the weekly, the daily may show a bearish trend. Then the 4-hour may show another bullish trend. Then the hourly may show a bearish trend. And you can go all the way down. And that's why being able to correctly understand the trend and have rules for a trend and have rules for what you're looking at, why you're looking at it, when you look at it is so important, because it's so easy to get confused with the trend. Because the honest truth is this, and you're going to hate that I said it to you, but it's real. There is no trend. There is no such thing as a trend. A true trend, I guess I can say. Because a trend is all relative to the trader and their time frame and their starting point. Yep. It's all your perception, which is intimidating for many people. But it's also empowering, because if you trust yourself to do analysis and it's your perception which confirms a trend, you have a lot of confidence in your confirmation of a trend, because the trend is based on you and no one else. It's not like a math equation where there's one answer for everything.